Welcome to the deep dive.
Today, diving deep into Indian life insurance.
Specifically, ICICI Prudential Life Insurance Company Limited,
Right.
their H1 FY 2025 results.
Kind of a mid-year report card.
Covering
April 1st to September 30th of this year.
Most
A stack of sources here.
financial statements, presentations for investors,
Press releases.
and even some insights into their sustainability efforts.
So by the end of this deep dive,
You'll understand how this company is making waves.
in a really complex industry,
What's fascinating is
ICICI Prudential isn't just keeping up with the industry.
they're outperforming it,
We're seeing that.
reflected in their 39.2% growth,
In retail-weighted received premium.
or RWRP.
Okay, RWRP sounds a bit technical.
Can you break that down?
Think of RWRP as the pulse.
Of their new business
It's the money
they're actually receiving.
in premiums from individual customers
It gives us a really good snapshot
of how successful they are.
at attracting new business.
And that 39.2% growth. It's not a one-time thing.
They've actually been
With
outperforming
both the overall industry
and their private sector
up
competitors.
to 4 quarters straight.
That tells you they're doing something right.
They're definitely on a roll.
So how are they achieving this kind of growth?
What's their secret sauce?
One key ingredient is
Their diversified distribution strategy.
instead of relying on just one channel
They're spreading their reach.
across agencies, direct sales,
Partnerships.
and even group policies.
So they're not putting all their eggs in one basket.
A smart move.
But it's not just about...
How they're reaching customers, right?
Absolutely.
What about the products themselves?
Your product strategy.
Is another major driver of growth.
If we look at the numbers,
One area that really jumps
that
out.
is their annuity business.
Seen?
A staggering 99.5% growth.
Whoa! Almost 100% growth in annuities.
That's got to be significant.
It is.
This tells us they have a keen understanding.
Of India's changing demographics.
A population is aging,
And more people
are going to need a steady stream of income.
during retirement.
Annuities are designed to do just that.
And ICICI Prudential is capitalizing on this growing need.
They're definitely ahead of the curve there.
And it's not just annuities, right?
Yes.
They're also seeing strong growth.
In other areas,
Their retail protection segment
which focuses on life insurance products
that provide financial security to families
in case of the unexpected
also saw a healthy bump.
of 17.2%.
This is significant because
India has a massive protection gap,
many people are underinsured.
leaving their families vulnerable.
So there's a huge opportunity
For companies like ICICI Prudential,
to address this need.
and they're clearly making strides.
So they're growing in multiple segments
Shows they have a good grasp of the market.
and are meeting diverse customer needs.
Now I'm curious
And
about...
they're framing their overall strategy
They've got this 3C framework.
that I found pretty interesting.
It's a clever way to think about
Their
it.
approach.
The 3 C's stand for competency
Customer centricity.
and catalyst
Each one represents a core pillar.
of their success.
Okay, let's break it down.
First up, competency
What exactly does that mean?
in the world of insurance.
For ICICI Prudential,
Competency is all about building.
the core strengths that enable them to thrive.
It starts with their comprehensive product suite
They're offering innovative products
across all the major categories.
annuities, protection, and savings.
And they're not just offering generic,
One-size-fits-all product
they have features.
tailored to very specific customer needs.
I noticed they mentioned
A constant maturity ULFP debt fund
that seems like a pretty niche product.
designed for a specific type of investor
It shows they're really thinking deeply.
about their customer base.
Yeah, it's a great example.
Another aspect of their competency,
Is their diversified distribution network.
which we talked about earlier.
They're not just casting a wide net
They have distinct strategies.
for each channel they use to reach customers,
And then there's operational efficiency,
which may not sound glamorous.
but is crucial for a smooth customer experience.
Right, no one wants to deal with a clunky,
Slow process.
especially in the digital age.
Exactly.
ICICI Prudential is leveraging technology
To streamline processes.
and make things easier for their customers.
For example,
They've achieved an impressive 48%
same-day issuance rate.
for savings policies.
So almost half of their customers
Get their savings policies issued.
on the same day they apply.
That's got to be a big win.
For customer satisfaction
It definitely sets them apart.
in terms of speed and efficiency.
Yeah.
Let's move on to the next say.
Customer centricity
This seems to be the big buzzword.
in every industry these days.
What does it actually mean for ICICI Prudential?
It's not just about lip service.
They're putting their money where their mouth is.
For them,
Customer centricity means going beyond
just having great products.
It's about building trust
and ensuring a positive experience.
throughout the entire customer journey.
One key indicator of that
Is their stellar claim settlement ratio?
is settling,
Almost 99.8% of claims.
which builds a lot of confidence and trust.
With customers,
That's a remarkably high rate
it shows they're serious about taking care of customers.
when they need it the most.
They're not just assuming they're doing a good job either.
They're actively measuring customer satisfaction,
Using NPS scores.
which are a pretty reliable way to gauge.
Like customers truly feel.
And they're embracing technology.
To enhance the customer experience.
I read that they're using digital KYC.
For 85% of their policies?
That's right.
Digital KYC not only makes things easier for customers,
But also demonstrates their commitment.
to modernizing and simplifying processes.
So they've got competency.
And customer centricity covered.
Let's talk about the final C.
Catalyst.
This one's a bit more abstract.
What's the catalyst?
Behind their success.
Catalyst is all about
The internal drivers.
that fuel their growth and innovation.
It's about their people,
Your use of technology.
their data-driven approach.
And their integration of ESG principles.
Environmental, social, and governance.
ESG is becoming increasingly important.
In the business world,
What are some of the specific ways?
ICICI Prudential is integrating ESG.
Into their operations.
They're investing heavily in their people
Leveraging AI and machine learning.
for smarter decision-making.
And actively managing risk.
And they're not just paying lip service to sustainability.
Their commitment to ESG.
Has earned them high rating.
From leading agencies.
It sounds like they're not just chasing profits.
But are trying to build a business.
That's sustainable in the long term.
But all this talk about growth and strategy is great.
But what about their financial health? Are they as solid as they appear?
The numbers definitely suggest.
Give us
the details.
What makes you so confident?
About their financial stability? Well, first of all, their solvency ratio
Is an impressive 188.6%.
that's significantly higher.
Than the regulatory requirement of 150%.
That's significantly higher.
Than the regulatory requirement of 150%. And indicates they have more than enough assets.
To cover their liabilities.
Okay, so they're in a strong position.
To meet their financial obligations.
But a high solvency ratio.
Doesn't tell the whole story, right?
What about their risk management practices?
This is where ICICI Prudential really shines.
They have an impeccable track record.
Of zero non-performing assets.
Since their inception.
That's a testament to their prudent lending.
And investment practices.
Zero NPAs.
It's practically unheard of.
Especially in the financial sector.
It's impressive.
It really is.
And they're not just sitting on their laurels.
They've recently taken steps
to raise additional capital
through debentures
for those of us
who don't speak fluent finance.
Can you explain?
Yeah.
Essentially, they're borrowing money
to fuel further growth.
The fact that they're able to do so
at favorable terms
demonstrates strong investor confidence
and their ability to generate returns.
So they're financially sound.
They manage risk effectively. And they're raising capital for expansion.
It sounds like they built a
pretty solid foundation for future growth.
But let's zoom out a bit
and look at the bigger picture.
What are the broader trends
shaping the Indian life insurance market?
And how is ICICI Prudential positioned
to capitalize on them?
That's where we get to
some really interesting dynamics.
One of the most significant trends
is the increasing financialization of savings in India.
Financialization of savings.
That sounds a bit intimidating.
What does it mean?
For the average person.
It means that more and more people
are shifting their savings away
from traditional assets like gold and real estate
and moving them into financial products.
Insurance and mutual funds.
So people are realizing
that there are more sophisticated ways than just stashing cash under their mattress.
Or buying another piece of jewelry.
Exactly.
And this trend is being driven by
a number of factors.
Including rising incomes.
A greater awareness of financial products.
And a push for financial inclusion.
By the government.
So this is a good thing.
For life insurance companies.
Like ICICI Prudential.
Absolutely.
As people look for new avenues.
To save and invest.
Life insurance becomes an increasingly attractive option.
Especially because it offers the dual benefit.
Of savings combined with protection.
Speaking of protection.
We touched earlier
on India's massive protection gap.
How big of a problem is this?
And what kind of opportunity
does it present for the industry?
It's a huge problem.
And a huge opportunity.
The protection gap.
Which is the difference
between the life insurance coverage people actually have
and the coverage they truly need
is estimated to be a staggering
$16.5 trillion in India.
Wow.
$16.5 trillion.
That's mind-boggling.
It is.
And it represents a vast, untapped market
for life insurance companies
who can effectively communicate the importance
of protection
and offer products
that cater to the needs
of this underinsured population.
So we've got the financialization of savings and a massive protection gap.
What other key trends should we be paying attention to?
There's one more that's particularly relevant
to ICICI Prudential's strategy.
The growth of India's retirement population.
As people live longer
and healthcare costs continue to rise.
The need for retirement plans
becomes even more crucial.
And ICICI Prudential
is already ahead of the game.
With their focus on annuities, which you explained earlier, are designed to provide that steady stream of income.
During retirement.
Exactly.
They're recognizing that retirement solutions
are a key growth area
for the future.
And they're strategically positioning themselves
to meet that demand.
Okay, so we've covered growth,
financial health,
and even broader industry trends.
But there's one key financial metric.
What they haven't discussed yet.
And it's a big one.
Embedded value, or EV.
Can you give us the ELI5 explanation?
Of what EV is and why it matters.
Think of EV as a sneak peek
into the future of the company.
It goes beyond just looking at their current profits and tries to assess the long-term value
they're creating for shareholders.
So it's like a crystal ball.
Trying to predict the future profitability.
Of the business.
In a sense, yes.
It considers the present value.
Of all the future profits.
I expect to generate.
From their existing business.
This gives investors a better sense.
Of the company's potential to generate returns.
Over the long haul.
And how's ICICI Prudential's EV looking?
Are they on track for long-term success?
They're doing quite well.
They've reported
a 19.4% year-on-year growth in EV.
Which is a strong indicator
that they're creating sustainable value.
But EV is a complex metric, right?
Not just a single number.
That's true.
It's influenced by a bunch of different factors.
You really understand.
What's driving the changes in EV?
We need to look at
what's called an EV movement analysis.
This analysis breaks down
different factors
like new business profit,
operating assumptions,
investment returns,
and even changes in capital all contribute to the overall change in EV. It sounds like we need to put on our thinking caps.
And dive into the nitty-gritty of EV analysis.
But before we get lost in a sea of numbers,
we'll take a quick break.
And come back refreshed and ready
to tackle this complex
but important topic. All right, so we're back.
And ready to untangle this EV movement analysis.
It sounds like we're about to become financial detectives. Piece together the clues.
To understand what's driving
ICICI Prudential's long-term value.
I'm ready to play detective.
What are the key pieces of this EV puzzle?
Well, the first piece
is something we've already talked about.
The value of new business, or VNB.
It's basically the present value
of future profit
from all the new policies
they've sold during this period.
Strong VNB is a good sign for EV.
That makes sense.
The more profitable new business they bring in,
the higher their overall value should be.
What else should we be looking at?
The next piece of the puzzle
is the impact
of operating assumptions.
Assumptions.
Yeah, that doesn't sound very scientific. For a financial metric?
It's not. Like,
we're just making guesses here, right?
It's not about random guesses.
These assumptions are based on
tons of data and actuarial analysis.
But they do involve
it's predictions about the future.
Things like
how long customers will keep their policies,
how many claims they'll make,
and what their expenses will be.
So if ICICI Prudential
gets those assumptions right,
it's good for their EV.
But if they miss the mark,
exactly,
it could hurt them.
And keep in mind
that these assumptions can change over time
as new data comes in,
or if there are shifts in the market.
Okay, so we've got VNB
and operating assumptions.
That's the next piece
of the EV puzzle.
Investment returns.
This one's pretty straightforward.
The money an insurance company receives
premiums
doesn't just sit in a vault.
Yeah, they invest it
to generate more returns.
Right, it's like a giant pool of money.
Working hard to grow even bigger.
That's a great way to think about it.
And those investment returns
directly impact their EV.
If they make smart investment choices,
then earn good returns,
their EV gets a boost.
But if their investments underperform,
it drags the EV down.
So they need to be savvy investors.
As well as insurance experts.
It sounds like
they've got a lot to juggle.
They do.
And then we have
one final piece to consider.
Changes in capital.
Capital.
Is that just the money?
They have to run the business.
Yes. But it's really about
How much capital
they need to hold in reserve
to cover potential risks.
and meet regulatory requirements.
Sometimes companies
To inject more capital, and that can impact EV.
So we've got V
But
and
no
E
operating assumptions.
and changes in capital.
These are the main ingredients
And that
that
determine.
how EV changes over time.
Precisely.
And when we look at,
ICICI Prudential's EV movement analysis,
you can see
how these different factors have played out,
there's strong V&B growth
combined with solid investment returns,
and some strategic capital injections.
have all contributed to that impressive 19.4% increase in EV.
Okay, so their EV is healthy
And they seem to have a good handle.
on the key drivers.
So let's shift gears for a moment.
Let's talk about something that's relevant
To anyone who's ever considered investing,
in any company.
risk.
Great point.
Every investment
It's just with some level of risk.
in life insurance is no exception.
So it's crucial for investors
Or understand the potential risks.
and how well the company is managing them.
What are some of the big risks?
A life insurance company like ICICI Prudential, our biggest risks.
Is interest rate risk.
Interest rate risk.
That doesn't sound too scary.
We're not talking about sharks.
Or skydiving here.
True.
But don't underestimate
The impact of interest rates
fluctuations in interest rate
can have a big impact.
on a life insurance company's profitability.
This is especially true
For companies
that offer products with guaranteed returns.
Okay, now I'm paying attention
How does interest rate risk play out?
in the insurance world.
It all comes down
To timing and guarantees.
when interest rates are low,
Life insurance companies
have to invest the premiums they receive.
at those low rates
And this can make it challenging.
for them to meet the guaranteed returns
They've promised to policyholders.
on certain types of products.
So if interest rates
Suddenly shoot up,
exactly,
they could find themselves in trouble
they might not earn enough investment income
to cover the guaranteed payouts,
they've promised
which could shrink their profits,
and even impact.
their overall financial stability.
Okay, now interest rate risk.
That sounds good scarier.
So what is ICICI Prudential doing?
To manage this risk,
Yeah.
some sophisticated financial tools
Derivatives.
to hedge against interest rate movements.
Derivatives. Aren't those risky too?
Weren't derivatives involved?
In the whole 2008 financial crisis.
They were.
But when used responsibly
Derivatives can be a valuable tool.
for managing risk.
In this case,
ICICI Prudential is using derivatives.
to lock in yields for future premiums. They can ensure
That's the way they'll be able to meet their obligations,
to policyholders.
even if interest rates fluctuate wildly.
So they're basically
Oh,
on their insurance products.
That's a pretty clever strategy.
It is
And they're not just focused on hedging,
against interest rate risk.
they're also carefully managing
The underlying assets.
that back their products.
Okay, tell me more about that.
What are these underlying assets?
And how do they fit into the picture?
Remember that pool of money?
We talked about earlier
The premiums?
that life insurance companies collect
Well, that money is invested,
in a variety of assets.
including bonds
Right.
and real estate.
Right.
Those investments generate the return
And they help them pay out claims.
and grow their business.
Fixing.
But the value of those assets,
Can fluctuate
which creates another layer of risk.
for the company.
So if the stock market crashes,
Or real estate prices tank
it could hit their investment portfolio
and potentially impact their ability.
to pay out claims.
That's the risk.
So ICICI Prudential is very focused
On maintaining a high-quality investment portfolio.
when you say high quality
What does that mean?
in terms of their investment,
It means they're investing in assets
that are considered
relatively safe and stable.
with a low risk of default.
They've mentioned
Their
this
significant portion
of their fixed income investments.
are in sovereign or AAA rated bonds.
AAA rated bonds.
Those are like the gold standard, right?
Yeah.
Considered super safe and reliable,
They're prioritizing investments,
that are unlikely to lose value.
even if the market takes a downturn,
This conservative approach helps
to mitigate risk.
and protect their overall financial health.
So they're hedging against interest rate risk,
With derivatives.
focusing on high-quality investments.
Any other risk management tricks?
Up their sleeve.
They're also very diligent.
About monitoring their liability profile.
Liability profile.
Can you explain that?
In a way that makes sense.
To someone who isn't,
A financial expert.
it's all about understanding
The nature of their obligations.
their policy
They're
hold,
analyzing things like
the types of policies they've sold,
the guarantees they've made
and how those obligations.
might change in the future.
So they're trying to get a clear picture
of what they owe their policyholders
Precise.
and how those obligations might evolve over time.
And this helps them
Identify potential risks.
and adjust their strategies as needed.
Okay, so they're managing risk,
On multiple fronts,
hedging with derivatives,
focusing on high-quality
and
assets.
closely monitoring their liability profile.
It sounds like they're taking
A very proactive and thorough approach
They are.
to risk management
And that's one of the things
that really sets them apart.
in the life insurance industry.
They're not just chasing growth,
For the sake
they're equally committed
to managing risk
and building a resilient business.
that can withstand market volatility.
So we've covered a lot of ground here.
We've talked about ICICI Prudential's,
Impressive growth,
their strategic 3C framework,
their strong financial health,
the exciting opportunities,
in the Indian life insurance market,
the complexities of embedded value.
their prudent risk management practices on our deep dive agenda.
We've seen how ICICI Prudential
By strategically positioning themselves
for success.
in a dynamic and constantly evolving industry.
But there's another aspect of their
Performance that deserves attention.
their commitment to sustainability
And integration of ESG principles.
into their business practices.
That's a topic.
For part 3 of our deep dive.
All right, we're back.
And ready to dive into
ICICI Prudential's commitment to ESG.
it's something.
We hear a lot about these days.
But I'm really interested to learn
how they're putting these principles into action.
it's not just a checkbox exercise for them.
They're really weaving sustainability.
Into the very fabric of their business.
Their ESG framework,
Covers a wide range of areas
from environmental impact
to social responsibility.
and corporate governance.
That's
pretty comprehensive
Can you give us some specific examples
of what this looks like.
in practice?
On the environmental front,
They're focused on reducing their carbon footprint.
and promoting energy efficiency.
In fact,
They received a lead platinum certification.
for their headquarters.
Lead platinum.
It's a big deal, right?
Isn't that the highest level of certification
It's
you can get for green buildings?
It means they've gone above and beyond.
To use sustainable materials
Reduce energy consumption.
and minimize their overall environmental impact.
So they're definitely walking the walk.
When it comes to environmental sustainability,
What about the S in ESG?
how are they approaching?
Social responsibility.
They're focusing on
A
creating,
diverse and inclusive workplace.
promoting financial literacy,
In communities.
and supporting various,
Community development initiatives.
for example,
They've highlighted their efforts
to increase gender diversity,
within their workforce.
a key indicator of social responsibility.
It's great to see
They're
them.
not just focused
Their own employees.
and are also extending their social impact.
to the wider community.
Financial literacy programs
Can be such a powerful tool.
to empower individuals.
And create positive change.
Okay, so we've covered the E.
And the S.
Now let's talk about the G.
In ESG,
How is ICICI Prudential handling?
the governance aspect,
They have a very robust,
corporate governance framework in place,
with clear ethical guidelines
and a strong commitment.
to transparency and accountability.
So it's not just about doing good deeds.
It's about embedding ethics and integrity
Exactly.
into their entire way of operating,
And all of these efforts
have earned them recognition.
from some of the leading ESG rating agencies
They've mentioned,
being highly rated by MSCI
which is one of the most respected names.
in the ESG world.
So it's not just good for the planet and society.
It's good for business, too.
Absolutely.
Investors are increasingly looking for companies that are effectively managing
ESG risks and opportunities.
by taking ESG seriously.
ICICI Prudential is sending a strong signal to investors
Which can enhance their reputation.
and attract a wider pool of capital.
And it's not just about attracting investors.
It's about creating a business.
That's truly sustainable.
in the broadest sense of the word,
A business that's not only profitable,
but also responsible
ethical, and contributes.
to a better future for all.
It's like the saying goes.
Doing well by doing good.
It seems like ICICI Prudential
It's a great example of a company.
that's successfully integrated sustainability
I agree.
into its
They
DNA
are proving
that you can achieve both financial success.
and positive social impact.
Well, I think we've covered just about everything
In our deep dive,
into ICICI Prudential Life
we
Insurance.
explore
Their impressive financial performance,
their strategic 3C framework
the exciting opportunity,
in the Indian insurance market,
the complexities of embedded value,
their robust risk management practices.
and their commitment to ESG.
It's been quite a journey
We've really gone deep,
into understanding this dynamic company.
and the industry they operate in.
I'm really impressed with ICICI Prudential.
They seem to be firing on all cylinders.
But here's a thought-provoking question.
For our listeners to ponder,
Given the rapid pace
of technological change,
how might technologies
like AI and machine learning,
further transform the life insurance industry?
in the years to come?
What might the future hold?
That's a great question.
The potential is truly immense.
We could see
Even more personalized products.
faster and more efficient underwriting.
And even more proactive risk management.
It's an exciting time
To be following the life insurance industry.
for those of you
Who want to explore
ICICI Prudential's performance.
in even more detail
We encourage you to check out
their full reports.
and investor presentations.
There's a wealth of information out there.
And who knows,
You might even uncover
some surprising insights of your own.
happy exploring.
That's all for today's deep dive.
Thanks for joining us.